Hello and welcome to a new video of FMTTM Future of Finance. Today we're going to be talking about the current state of Bitcoin and if the bear market is finally over. Before we get into today's video, I just want to take a moment to remind you that investing always carries some level of risk and it's important to do your own research and consult with a financial professional before making any investment decisions. This video is for educational purposes only and is not intended to be investment advice. We are now in the month of February 2023, and it's worth noting that the Bitcoin market has seen a significant increase of plus 44% just in January alone. As a result, traders are beginning to wonder if the lows have already passed and if many people who were previously on the sidelines are now re-entering the market. It's also worth mentioning that the next Bitcoin halving is just 444 days away, which is a crucial event in the Bitcoin cycle. Each halving event causes the issuance of new Bitcoin to decrease, thereby increasing its scarcity and fueling its narrative as a store of value and digital gold. When it comes to the current bear market, there are many factors to consider when trying to predict the bottom. However, we can make some observations by comparing the current market conditions with previous cycles. In the past, Bitcoin bear markets have typically ended after prices have fallen by 85% from the previous bull market high. With the current market, we are now 78% off the highs, so it would take a move to around $10,200 for BTC to fall 85% like previous bear markets. In addition to considering the price, it's also important to consider the macroeconomic context of the market. Currently, the Federal Reserve is approaching the end of its rate hike cycle, which has tightened the monetary supply and put pressure on risk assets. However, there is a possibility that the central bank may pause its tightening cycle this year if inflation stays elevated and global growth deteriorates. If we look at the historical pattern of monetary policy cycles and their impact on the market, there is a distinct pattern of stimulation, pause, tightening, pause, and stimulation. Currently, we are in the tightening phase, but if inflation stays elevated and growth deteriorates, there is a possibility that the central bank may turn the money printer back on in 2024. However, if a prolonged recession occurs and people can't afford their cost of living, they may not be investing in the market, leading to increased fear and decreased savings. Despite all of these macroeconomic considerations, the lead up to each Bitcoin halving has historically formed the bottom in preparation for the next bull cycle. This is due to the predictable and capped supply of Bitcoin, which increases its scarcity and its appeal as a store of value. Given all of these factors, it's reasonable to conclude that the bottom of the current bear market could be considered in, with a price around $15,000 in November 2022. However, as with all market predictions, there is always an element of uncertainty and fluctuations in the market can always occur. Overall, the potential for macroeconomic shifts in 2023 and the upcoming halving in 2024 pose a two-pronged attack for the stubborn bears, and it will be interesting to see how the market reacts. As we approach 440 days from the most recent halving event, it's clear that the Bitcoin cycle is in full swing. The price of Bitcoin has been steadily climbing since the beginning of the year, with a significant 44% increase in January 2023 alone. This is a classic sign of the start of a new Bitcoin cycle and is a positive indication for those invested in the cryptocurrency. At the bottom of the cycle, which was in November 2022, the price of Bitcoin reached around $15,000. This is considered by many to be the end of the bear market and the start of a new bull run. During a bull run, the price of Bitcoin typically rises as more investors enter the market and demand for the cryptocurrency increases. The Bitcoin cycle is known for its volatility, but it's also known for its ability to generate substantial returns for those who invest at the right time. The halving event, which occurs roughly every 4 years, has a significant impact on the price of Bitcoin and is a key factor in the Bitcoin cycle. As the supply of new Bitcoins decreases, the scarcity of the cryptocurrency increases, driving up its price. This creates a virtuous cycle where increased demand leads to higher prices, which attracts more investors, which leads to even higher prices. This cycle has played out several times since the creation of Bitcoin and is expected to continue for many years to come. In conclusion, the current state of the Bitcoin cycle is a positive sign for those invested in the cryptocurrency. The bottom of the cycle has passed, and the price of Bitcoin is expected to continue its upward trajectory as we move further into the bull run. It's important to remember, however, that investing in cryptocurrency is a high-risk, high-reward proposition and should only be done with caution and a long-term investment strategy. Thanks for tuning into our discussion on the recent Bitcoin halving and its impact on the market. We hope you found the information valuable and insightful. If you enjoyed this content, be sure to subscribe to the FMTTM Future of Finance channel for more updates and discussions on finance and trading. If you like this video, give us a thumbs up and share your thoughts in the comments section. We appreciate your feedback and any suggestions you may have for future topics. Thank you again for watching, and we look forward to bringing you more informative content in the future.